afternoon, everybody. Welcome to the TraderMerlin show for your Tuesday afternoon edition. Something slightly, you may notice a change here because I'm building a whole new studio in my home. I upgraded everything. We were streaming the show at 720p because I didn't want there to be any data glitches, any backlog in data. I've upgraded to 1080p, so now you get to see all of the wonderful pimples and disheveled bad hair and all the wrinkles that I have going on. Yes, man, I should have brushed my hair for this inaugural voyage in 1080p for you. So hopefully it all comes out, looks good. If you guys see anything, notice anything wrong, color, audio-wise, visual-wise, let me know because I had to redo every set for the show, which I know doesn't seem like a lot because you guys don't see what I'm doing on the back end, but lots of changes, and hopefully it comes across much cleaner and looks a little bit better from a quality perspective, especially those of you watching the old recorded videos on YouTube. All right, as you guys know, I wanted to spend as much time with a lot of my friends, traders, and investors that I know and kind of get their perspectives on what's going on in 2024. Of course, our opinions don't really mean much, but I think it'd be good for everybody to kind of have an idea of, hey, I'm this type of investor, or I resonate more with this type of trader. What are they thinking about it? Or something that maybe my shirt's buttoned sideways. See, now you're all messing with me. My shirt's not buttoned sideways. It's looking good. I like to get that perspective. And, sometimes you learn about things along the way. You find out things you may think are more interesting or maybe change your perspective on these markets. So hopefully that will happen on today's show. I know it will because I've had plenty of time over the years talking to this guest, and he always has insights into the markets and learning lessons for all of you. Here is our graphic for today. This is a little AI picture of Justin Krebs with the 2024 market outlook, joining us today from the East Coast. How you doing, my friend? Are you staying warm, nice and cold over there, or what?
You know what? It's going to be 18 degrees tonight in Charlotte, which is very, very cold for Charlotte. So
18 degrees. Wow.
18 degrees.
Yeah, it's funny. You look really red.
You know what? It's 5 o'clock here, and I have my monitors all go to that the blue light. They get rid of the blue light.
Nice. I like it. It's okay. It caught me off guard. I was like, you got a nice little red hue going on.
Yeah, it's not going to fix.
That's all right. It's the person we like. It's just going to be the commentary. So things going good for you out of there? I mean, I know it's been usually around year end, especially for wealth managers. A lot of work to do near the end, getting people all buttoned up for end of year tax planning, et cetera. How'd you fare? You happy to have the new year going?
Yeah, I actually am one of those. I'm actually one of those advisors that actually do taxes and stuff like that. So yeah, we actually. I spend a lot of the time just before the new year, doing any remaining Roth conversions or anything like that, and some kind of advanced what if scenarios on their taxes, and trying to get sometimes charitable distributions, or trying to, sometimes you even create like some irrevocable trust to hide some other money. But yeah, and then the start of this year is obviously doing all the reviews right now. So just to review everything from the past year and stuff of that nature. So. Yeah, fun times. It's a busy time of the year for me. So
yeah, well, good to hear. Busy's good, man. And it beats the alternatives. With that, part of this, obviously, the show is going to be talk about the 2024 market outlook. So, you mentioned that there's the review sessions you're doing with all of your clients, and I'm sure that, of course, looks at past performance. But I'm sure a lot of that has to do with setting expectations and at least getting some thoughts on what this upcoming investing and trading year may hold. So, our first question for you is, what is your biggest concern for 2024? It could be both personal or things that maybe you're addressing to your customers. Hey, here's what you should be paying attention to. What's your biggest obstacle, do you think, in 2024?
That's really hard to say because it's just always. I take the philosophy is that, like you just said, like who knows? We all have opinions. It doesn't really matter. So you're right. It's about setting the right expectations. And I honestly tell everybody that I work with that I'm always going to be apologizing for something. And what I mean by that is that the way that I think longer term investing should be, especially in or close to retirement, is you should have parts of your money doing different things. Some parts should have full permission to be more on the conservative and the safe side. Other parts should have that full green light to go, baby, to get that growth. And then other parts of your money should be doing, something different, like giving you some yield or giving you alternatives to the market or something of that nature. All the stuff that we've talked about for the last, year and a half, 2 years, right, on the show. So so I think setting expectations, and when I look at like something like 2024, yeah, obviously there's that possibility. All the projections from all the big boys are all over the place. I think I
Yep.
saw JP Morgan's projecting a 12% loss, and then you've got um, who's got, like some of them also have like a 9% gain for the year, and it's just it's all over the place for all kinds of different reasons. So that tells me
No
nobody.
one has a clue.
So setting expectations is always the most difficult part. So because you always have those, I talk with my clients almost at least once a quarter. I try to anyway, right? Sometimes sometimes they're too busy to talk, but trying to touch with them on a quarterly basis, going, okay, hey, here's what the market's doing. Here's what we expected. Are we falling in line with the expectations? So like if 2024 ends up ripping again, like 2023 did, well, some of the stuff that we decided to get a little bit safe, I'm going to be apologizing for that. Like, if we would have known that, we would have put it more towards the green light. But if 2024 happens to be a down year, well, I'm actually not the person that typically sits there, but yeah, I mean, some of it's going to be down. So
Right.
you're always going to be apologizing for, hey, the market's down. We did our best to try to get out, but we ended up with a loss here, right? So that's always, to me, the start of the year is always kind of that biggest obstacle, setting expectations properly.
It's interesting that you present it that way, that you're always be apologizing for something. And I don't know if that's necessarily true. I mean, I guess if you were to line up if you segment their portfolios, and you're going, some here in commodities, maybe some in equities, maybe some in bonds, and you're sprinkling it around to achieve whatever the overall goal is, yeah, without question. They're not usually, you're not going to get everything working in your favor. But in principle, the mix of elements should protect against a significant market correction. So, if 2024 goes to hell in a handbasket, your allocation should buoy that and protect from those losses. So it really wouldn't be more of, apologizing. At that point, you're saying, you're welcome. Because if I just put you in one thing, you'd be taking a much bigger hit. Yeah. Whereas if the market's, just so you know, I'm going to ask you at the end of this what you think the S&P is going to be for the end of the year, which I've asked every guest plus all my viewers. And we have ranges from negative 55%, so a 55% drop, up to an 86% gain for the year. So trust me, our analysts here at Trader Merlin have some significant deviations in their expectations as well. But going back to your point about apologizing for something, I don't know if it necessarily needs an apology in any way, right? I think that's why they're bringing you on, is to know that you're protecting them through this diversification. So I think I commend you as opposed to asking an apology.
But again, it's real easy to, it's real easy to have a conversation, and everybody that reads the news, they read about, hey, well, the NASDAQ was up 30%, or the S&P was up like 20%. And they're like, hey, how'd we do? And you got to go, well, yeah, the growth part was up in that area, right? We were up 25% on your growth part, but on the conservative side, we only yielded 7%.
Mm-hmm.
So everybody's always that backwards looking. No matter how well you set the expectations, everybody's always like, yeah, but if I would have left everything in the S&P, it would have been, you know what I mean?
Yeah.
That's not goal is, right? The goal always is to try to smooth out that ascent,
right?
Not to have that
an uptrending channel of account growth, right?
Correct. Yep.
Yeah, you'll have your peaks, you'll have some pullbacks. The key is that those pullbacks don't, break down out of that trend line. And I think that a lot of people don't appreciate that. They think, oh, well, if the market was up 30%, then I should have gotten 30 or 40 or 50%. Well, what if the market's down 30% and you made and you lost 5%? That's winning. I mean, that's a huge win if market's down 30 and you only lost 5. So.
Yep, exactly.
You mentioned kind of setting expectations. There's two looming dark clouds over our market right now for 2024, and one of those is going to be obviously the election, and the second one is going to be interest rates. Right now, the Fed has telegraphed that they're going to be at 4.6% by the end of the year, which would be a slide of 90 basis points from current levels, right? So call it almost 4 cuts. The market is pricing in, let's see, right now it's 7 cuts is what the traders are pricing in for Fed funds futures. So obviously when you have something like the election year, there's some statistical data which may help you in your portfolio allocations, and also in rate rise or rate lowering environments that may also impact. Do those factors kind of shift your assessments of 2024 and how you set those expectations?
Well, I tell you what, I mean, it is just a very big struggle for me to lend a lot of credence to fundamentals.
Mm-hmm.
I do, to answer your question, yes, they do. But to if I had to weigh it as far as how much it actually comes into that, I would say it really doesn't. It's more from a technical standpoint, because again, I would argue with anybody until I'm literally blue in the face that the technicals tell you everything you need to know, including the fundamentals about what's going on.
Yeah.
Uh, so do I have that conversation and say, hey, you know what? Looks like consumer spending slowing up. Looks like there could be some drop in interest rates. Looks like, hey, you know what? There's, maybe the Republicans take back over the president, the Oval Office. Do we have those conversations and setting the expectations? Yes, but in all honesty, for me, did it break a trend line and a support level? That's what it comes down to. If it did, okay, let's divest ourselves of that or part of that, and find other uses to it. But people don't get that. You know what I mean? They
Totally.
want to hear a fundamental explanation that makes a logical sense. Even though, again, I would argue all day long that all the logic out there on CNBC, it's 90% of it's just noise. So
It's just opinions, and I think it's sensationalism and another factor too, because if I think that if all TV pundits spoke like you did right there, it would be kind of, no offense, it'd be boring to watch the TV, because you're like, I don't want to be a soothsayer. I'm not trying to be an oracle or some crystal ball and predict the future. I'm just going by what the market gives me. And on a face value, that's boring. You know what I mean? It's not like that's flashy or exciting. But if I go out there and I make a call that, hey, we're going to get 7 rate cuts this year, Nvidia's going to go to 1,000, S&P's going to drop by 15%. Now I'm putting myself out there, and it's exciting. People want to hear it. They get emotional. And at the end of the year, I'll only focus on the calls I made right, unless you're Jim Cramer and everybody focuses on what you did wrong. But I wish more would just have that attitude of yours, which is, I don't care. Democrats win, Republicans win, conservatives win, libertarians win, whatever. The markets will move. Period. I know that. So
exactly, it's just about responding to what happens, not trying to get. It's like you've watched the football games, I'm sure.
All of them.
Yeah, but people watch all those shows because they're like, okay, who's Howie picking? Who's Jimmy picking? Who's like. Who cares what the heck they pick? They got to play the football game. So you're going to watch the football game regardless of whether they pick your team or not, right? But everybody's always like, ooh, who they pick? Who cares?
Yeah.
Right? Watch the football game.
I've mentioned this one many times on this program. There's a great video that Saturday Night Live did, and I can't remember the title of it, but I think it was called. Basically, they have a fund manager, and he's speaking to all his shareholders, and he's like, yeah, if you believe that the markets are going to crash like we did, you have to convince somebody out there to buy the shares. It's just common sense. And he's like, well, why are you talking up these stocks? Like, well, duh. I mean, I need to find buyers for it. So, most of the time that media is just influence. And my viewers know my 10 laws. One of them, number 3, is ignore the news, but listen to every word of it. Because I've learned in the past that if I hang on to what, I don't know, some industry expert, whether it's, Maria Bartiromo or Joe Kernan or Bob Pisani, if I listen to their advice, I'm not making an informed decision. I'm making a decision based off whoever they're being sponsored to talk about and push their agenda, which bugs me.
Yep, I agree, 100%.
All right, so first question was, what are the biggest challenges in 2024 for you? I don't feel like there were any big challenges, just setting expectations, making sure that we know what the plan is for you and your customers. In that window of discussion, is there a market segment or a couple of market segments that you look at and you go, you know what, based off this environment, whether that's, declines in the dollar, maybe interest rates being lowered, maybe different presidential administrations, is there a market segment that you say, I'm feeling pretty confident that this segment's going to perform good this year, or maybe some segment that's going to underperform this year? And it doesn't have to be a market segment. It could be a commodity. It could be anything you think is going to underperform or overperform this year.
I mean, I would like to say that based upon what happened last year and where like value stocks are, I would think value stocks should have a decent rally this year. I still believe, I'm still a believer in a lot of the tech stocks are still going to, I think they're still riding the sales of of AI. So, I mean, I think the problem is that last year you had value stocks get hurt because the allocation to tech stocks.
Mm-hmm.
So at the same time, I'm thinking, well, value stocks are actually fairly inexpensive relative to value stocks, and small caps seem to be relatively inexpensive to the rest of what happened last year. So if I'm looking for those areas, and from a technical standpoint, I mean, I don't know. I mean, I think I like for this, for example, the small caps have some room to run. Um, if the market continues to shoot up, obviously, I think tech's still going to perform well. Um, I honestly have a personal opinion that tech's here for a while. That's going to be like the dominant and going to continue to be the dominant force in the markets for a long time. Um, but yeah, I mean those are kind of what I'm looking at. I'm looking at if people want to get back into value stocks now, I don't think that's a bad idea. I think tech stocks are still going to take off. Small caps, they lagged last year. So I mean, I think they're a little bit undervalued. So yeah, I mean, those are some of the areas that I would look at. I'd still stay away from things like, you know, I, I don't really like. I don't know. I'm a little bit leery of bonds still.
Mm-hmm.
Um,
It's funny. That's the one I'm having a big problem with as well. Just knowing all the macro pieces about who's buying U.S. bonds, the issuance of bonds. I'm having a tough time with that one as well.
yeah, it's just a hard call. I mean, it was pretty clear, I think, year and a half ago what to do, right? I mean, they're going on a raising interest rates hike, so I think that was pretty clear.
Yep.
But yeah, now not so sure anymore. So
Yeah, I have the 10-year bond up here for the viewers at home. If you really look at, I'll do two things. Number one, let me bring this up here, and I will share this with you guys so you can see Forex Factory just to get a peek at what our Fed funds rate has been. And we'll go back to the calendar here, and I'll show you the history of it. What was it? December 21st, I think, is when we had our rate cut. Our last announcement for the U.S. No, it wasn't the. Yeah, when was that last one? Remember?
no,
Nah, you don't know. Let's go. Central Bank. I'll get it. It's not going to take me more than a couple seconds. But reason I want to show you this, guys, is if you look at, or was it the week before, I was pretty darn close. So 5.5% is where we are at. Just look at where that rate increases really were aggressive. That was actually going back into January is when it all we went to liftoff of January 2022. And if I go back here and let's see, I was going to show you on the S&P chart. You go back to January of 2022, we had already had a nice move for a while because the expectation was, look, they're going to have to start raising rates at some point. But from that point, if you go from January of 2022 when we went into liftoff mode, the markets, even with this big pullback we've seen in that 10-year, 120% gain in the yield. We went from roughly 1.7%. At one point, we hit 5%. Now, the equity markets in that same window of time, going from January of 2022, get my cursor on the screen here. Sorry about that. Taking some time. We have actually up on that period of time about 8.7% since they started the aggressive rate increases. So that's actually, I have to say, one of the biggest surprises to me, Justin, is we've had such a massive increase in rates, obviously that 10-year soaring, yet the market still performed well. I think historically the belief would be that it's going to crash because the cost of capital has gotten so much more expensive, but it didn't, which goes back to something that you and I know very well, which is everything works until it doesn't, right?
yep, exactly.
Go ahead.
That's what I think. I spent so many years talking about certain talking points when it came to certain companies, and they feed you this and like, hey, this is historically how everything works, and I'm like, at times I bought into that, and I'm like, yeah, okay, yeah, but I mean, how many times in the past 20 years, like I've been trading since 2004, how many times in almost the last 20 years have we looked at the markets and like, yeah, well, the market's got to do a correction here. Look at how high it is.
Yeah,
Look at the bubble. The bubble. It's a bubble. It's a bubble. But Yeah.
And it is a bubble, but it can still get bigger. I mean, until it pops, it just keeps on getting bigger. And we've had a couple, we'll call it letting some air out. It hasn't been a crash by any stretch, but you have a bond market that's gone crazy, an equity market that's gone crazy, currency markets, especially the U.S. dollar, have just been massive changes. So, the system works. The system still functions, even if we think it's broken. And I'm in that bear camp. I think that things can come crashing back down. However, most of my winning trades this year or last year, bullish. The long trades, the majority of my gains last year, even though I'm overtly bearish on this whole thing, I think it's a house of cards going to come crashing down at some point. My bias has to take the back burner here, which is, I think, what you started off the conversation with, was setting those expectations and, spreading things around. So give me what the market gives me, and that's it.
Yeah, exactly. I get it.
If I go forward to the end of the year, and I will bring up this graphic right here. So if you go to the SPX and look towards that end of the year, one question I'm asking everybody is, and again, I know that you don't know this. I wish that you did. If you did, just tell me offline if you really, truly, actually know factually what this will be. But what do you anticipate the S&P 500, the SPX in particular, where do you think that's going to be at the end of 2024? It's just one of those questions I'm asking all my guests on the program, and the reason is, I know this is a high priority for you, but I have some TraderMerlin shot glasses I will be giving away to whoever gets the closest guess on that one. And I'll tell you at this point, the guesses are all over the place. I mean, they are absolutely all over the place. So, we got any guesses there?
Yep. Although I hate to do projections.
I know you do. That's why I'm asking you. I'm torturing you with it.
I get the feeling that we're going to break out in the next couple weeks. We're going to go for 50, or we're going to go for the 5,000 mark, and we're going to break above the 5,000 mark, and then get a rip above there, and then pull back towards the end of the year to settle at about 5,100.
5,100. That. Yep. All right. So I'll just do this real quick here. Put you on there, and you are now on the list, 5,100, which would be, just so we can get the numbers straight here, sorry, I'm putting in spreadsheets as we speak, that would be a gain of 6.94% on the year. Now, just to make you feel a little bit better, I will sort this just so we can get them all by the numbers, and brace yourself. Can you know what my guess is, or what my number is, Justin? This is, by the way, Justin hasn't watched this show. I don't think he watched this show, but if he's 5,100, which is 6.94. I'm 5,102. We're pretty damn close, bud. You're 2 points below my target. That's pretty impressive.
I think I'm not actually shocked by that. I actually think that great minds think alike. So I'm not shocked at all by that.
Good answer. You trying to get more frequent appointments on here, huh? Is that what it is? Butter me up.
So I can show my red face on the show.
It's good. Well, we'll get you a little ring light or something to help you out there. What else is there? Anything? Obviously, your approach towards the markets, I think, is what it should be. Which is, look, I could have opinions, but my opinions don't matter. I think that it's market gives you what it gives you. Particularly as a wealth manager, I think that's critical, because I think as somebody who's managing money, if you set those expectations or put your opinions into it and you're wrong, it can dramatically impact clients' accounts. So you got to kind of shelve that. What else in this 2024 are you looking forward to? Anything noteworthy plays? Anything out there that you think is interesting you want to share with us?
I mean, not necessarily the markets. I think 2024. I think we got a couple years left of enjoying the tax brackets that we have now. So I always tell people, look, if you're on the fence about doing any kind of Roth conversions or starting to get your money more into the tax-free realm, you have a couple years here where if you just look at the math, the 2017 tax cuts are set to expire in 2020, at the end of 2025. So 2026, we'll have tax brackets. Now, the most common tax brackets are the 22 and the 24. Well, they're going to now go to the 25 and the 28, right? Mm-hmm. So if you're sitting in that 22, 24, and you're going, hey, you know what? I've got $1 million, $2 million worth of tax deferred money, 401ks, IRAs. I can tell you right now, if you don't do anything about it, you're going to spend the rest of your life in the 24 current bracket, 24 and upwards for the rest of your life because of RMDs and stuff like that. So I think it's worth taking a little bit of money off the table, start to get that into a Roth side of things. Even if it pushes you in the 24, who cares if it pushes you in the 24, because you're still paying 1% less than where you would if you were just, just sitting there in the 22 and it goes to 25. So I think taxes are going to be a big deal, and to take advantage of, we're still in a historically low tax situation.
Yeah.
People don't get that. We're still in a very low situation there on the tax side of things. So I would just like to me personally, everything you can do to push money into tax-free accounts, I think will save you later on in retirement. And not only that, it's going to take the liability off the table. So I harp on my clients, not just on the investment side, what we do in 2024, but what are we doing tax-wise as well? Because I think that's just as important. So
yeah, and going into an election year, you saw all the data of Iowa caucuses and how that went. You could see drastic changes going forward, and particularly if we do see an administration change. Obviously the Republicans are all about tax cuts, which may give even more opportunity for them. But I think you're right. I think that if you are in a historically low situation with regards to taxes, some of these vehicles can offer some pretty, I guess, appealing. The appeal of moving into, especially Roth type of stuff, I think is a great way to go.
Yeah.
And you guys got any questions for Justin today? So Oliver says, so you're saying take money out to try to put in some Roths? Yes, that's essentially what he's saying.
Yeah, well, and again, it depends on your age and stuff like that. You have different ways to go about it. You can do conversions, you can do contributions, and I know people out there go, I can't contribute. No, you can contribute. There is something called a backdoor Roth. You can contribute. You just have to know how to do it correctly, right? So there's contributions and conversions. Once you reach 59 and a half, well, you can do conversions at any age. You just have to have a non-qualified account to pay the taxes on the conversion. But once you get 59 and a half, you can actually withhold the taxes within the account rather than pay it from an external account. So yeah, that's what I mean. Try to get money from tax deferred situations or even taxable situations and get into tax-free situations. That way you don't have to pay taxes on it ever again,
Oh, until they decide to make us pay taxes on it again.
But I think some people bring that up, but I think you can't. You have to grandfather that in. You can't just, you know what I mean. You can't just change the rules on a Roth, midway. Say, hey, this is going to be tax free. There's not going to be any taxable events should you pull the money. I don't think you have to grandfather that then in. And as much as I'm cynical, the government has done a pretty good job of grandfathering things in that have already existed prior. So.
There you go. All right. Guys, I've had, obviously, a conversation here with Justin Krebs today. If you go to his page, which is The Proactive Investor, I've got it right here. You can find out more information. He's happy to reach out to anybody and have a conversation with you guys about those backdoor Roths or anything else that you might want to know about your wealth planning. If you got some capital you want to actively trade yourself and you want to let someone help you with that, you can find out more information by going to theproactiveinvestor.com. Anything else, Justin? Are we good?
No, I mean, we're good. I'm struggling a little bit. I fell off a 30-foot ladder yesterday.
What are you doing on a 30-foot ladder, bud? Taking down the Christmas decorations?
Yeah, but luckily I was only on the first step. So.
Oh, wow. That was good. That was good. He's starting a stand-up comedy gig here. It'll be at the Charlotte Improv starting in October. Have you ever done improv?
Not in front of a public, but
family. Every day it's a stand-up routine for the family. When you got that many kids, you got to be funny.
Yeah, exactly.
Yeah, for those that don't know, Justin's house is actually built like a giant combat boot. The old Mother Hubbard lives in the shoe, while Justin lives in a hiking boot, so it's pretty nice. But I'm done. All right, Justin. Well, hey, and you, Liz, and several others have been asking, any update on Dwight Traderman? Have you talked to that guy lately? Is he doing okay? I haven't talked to him in a while.
Of course, Liz is going to ask about Dwight Traderman. I haven't seen Dwight in a long time, so
No, poor guy. Well, I hope he comes back. Dwight was the best. The best, I tell you. All right.
The same, so.
Yeah. Well, we'll get him on there one time. All right, man. Well, hey, thank you very much. I appreciate it. I hope you have a fantastic 2024. I hope you and your clients do well. Much love to you and your family, and we'll get you back on again here soon, my friend.
All right. Thanks, buddy.
All right. Take care.
Yeah. Bye.
Bye. Guys, that was Justin Krebs of the Proactive Investor. You can find out more information on his website. He is saying 5,100 was his target for the year. That lines right up with Ken. Ken also had a 5,100 target. That would be a 6.94% for the year over year. Just been trying to forget about it. All right, let me jump into our overall markets today. Crazy action out there, I will say, after Elon Musk's tweet about Tesla not expanding into other areas. I think that had an interesting impact on Tesla's stock today. So let me just bring up TSLA. Tesla on the day up 0.47%, but you had a nice gap down over the weekend. It had this kind of 3-day sell-off that brought from peak to trough over those last 3 days. Tesla fell 18%. Or sorry, those are 3 weeks. What am I talking about? Not 3 days. That'd be a huge sell-off, 18%. But there you go. That's the gap down I wanted. So it's actually 4 kind of heavy days in a row that brought this down 11.7%. Or if we go from that peak, which started on December 28th, down almost 20% off of its highs. Someone was asking me, should I buy Tesla? And I'm like, I don't know. That's you, man. I don't know if I could do that. I might actually look at selling some puts right around the 190, but right now I'm not. I've got a lot of capital on the sidelines kind of waiting for an opportunity. I haven't seen anything that really strikes me. Now, I know some of you might be thinking Spirit, right? If you saw Spirit Air today, holy cow, Spirit Airlines save. You could save on their stock, apparently. Look at that move today. It opened up this morning at roughly 1508, hit an intraday low of $5.80. Yeah, that was intraday, folks. Crazy. I believe this lock limited, so I think what they actually had some freeze on this one. Let me just make sure. I'll do a 1 minute time frame so you can see if it actually was halted, which it most likely was. Let's see. That was at 53. Yeah, so they halted it for 5 minutes there, and then it gapped down again, and then they halted it for another 5 minutes. So double halt going on Spirit Airlines. Crazy. 2 lock limits. That's crazy to see that intraday on a stock. Careful with this one. I still wouldn't touch it with a 10-foot pole. Just insane. Can you imagine being in Spirit? I mean, come on. I make fun of Spirit all the time for being one of the crappiest airlines on the planet. This is not a real shocker here. What is a real shocker is it has erased 3 months worth of gains. It erased all of November, December, and January's gains, evaporated, and then some in one giant red candle. Man, I think actually if you go to the hot list, that might be your biggest loser on the day. Yeah, 47% slide for Spirit Airlines with 100 million shares traded today. So an extremely active day for Spirit. More of a bloodbath, really. Dwight Traderman, he was the nemesis of SS. He was just some rogue trader, some crazy trader out there. Better to be in Spirit Airlines than in a Spirit Airlines. Yeah, you're financially destroyed, not totally destroyed, Steve. That's an ugly one. Let me run through our top 8 markets here, and then we'll kind of move on. He was talking about opportunities in the Russell. And you notice that the Russell, particularly today, down 1.21%. I think I still stand by it. I think that $1,900 target is in play. We had that one big day bounce on January 8th. It bounced up significantly, and then it's kind of continued its downtrend ever since. And today, stretching out even further. So, this begs the question, and I'm curious what you guys think. You guys let me know in the chat what you think. Textbooks on trading and investing have the Russell as the quote-unquote canary in the coal mine. That when markets are doing good, the Russell is surging. When markets are doing poorly, the Russell is the one leading to the downside. And if you look at what's been going on in our markets here recently, there's your Russell, right? Your Russell off its peak. Let's get you that going back here to December 27th to where it closed today. The Russell is down 7.48%. If I do that same sort of analysis with the S&P, here is the ES. Notice that's not even close to that sort of decline. You're looking at just down 0.89%. Technology, which has been was getting slaughtered, all of a sudden doesn't look so bad. It's only down 1.16%. So you've got the NASDAQ down 1.16 from the peak, you've got the S&P down 0.89%, and then the Russell down 7.48%. So my question to you in chat is Russell being the canary in the coal mine, which is signaling to the markets that there's money rolling out of small caps, which may ultimately lead to the overall broader market sell-off, or is money rolling into the big caps and then this is just going to follow and catch up to the big caps and make an all-time high? Curious what you guys think. Let me know in chat. You know, there's no right or wrong answer until one of us is proven right. It's one of those conundrums that I learned when I was going through all the finance books. You know, this would say right here that this is going to lead to a market decline, and I don't know. I do think you're going to see a little bit of a further pullback on Russell, at least down to the 1900. The number I had mapped out was 1886 on this, but right now it's looking like it's going to drift lower and lower. So let's see what do we got. That was your worst performer on the day. I will click on this bad boy to update them because they've changed. All right, let's see. What do we got here? Oliver says rolling into the big caps. Pepe says poll. I didn't have time to type the poll, Pepe. This is just typing in the chat. So yeah, you guys think money's going to the big caps? Oh, it makes sense. You know, you got to put your money to work. It's got to go somewhere and work. And in this case, you look at the broader indexes. You know, S&P doing the best. Let's check the Dow off those same levels from the peak to where it is right now. Dow a little bit worse. So if you look at the best performer, it's the S&P from the peaks. If you look at the NASDAQ, that was the second best performer. Dow's third, and then the Russell significantly worse. Naum says, I see a correction, that is all. Yeah, and I think an overdue correction. When you look at something that moves this much, even Jim Cramer said it on his program, and I agree. He says when you have something go parabolic, you can expect it to be a pullback. And, you know, moving in 2 months from, well, call it 28% gain in 2 months is unbelievable. That is a phenomenal run. Definitely due to be a pullback here. And if you're using fibs, those lines may bring us down to, it's got 1922 as the 38% retracement on the fibs, but I still think getting down to that 1900 or 1886 is kind of where it's at. All right, that was your worst performer on the day. Gold down 1.04%. I'm bummed because, as you guys know, I am still waiting to sell all these calls on silver, and we've had 2 down days in a row on SLV. A little bit bummed about that one. I was loving seeing that jump up on Friday, and I thought we would actually creep towards this 2250 mark. That's why I was kind of holding off on selling some calls. I was going to sell the 2350 calls, but yeah, that's a remarkable insight comment from Kramer. Well, you know, he's got to be right on some things. He's been just, his calls have been so atrociously wrong over the past decade or so. It's unbelievable. So anyway, that was your gold down 1.04% to 2030. Bitcoin struggling yet again, although today was an up move. It's over the weekend, had some big down moves. You look at the grand scheme of things, look at the trend line here. I guess I could put a simple moving average on there. That's a 200, but let's be more reasonable and go, that's a 50, excuse me. Let's go to a 20 period moving average. We probably broke the 20. Yeah, we've officially closed down below the 20 on the daily basis, but I'm not too worried about it. You guys, I think I mentioned on the program that I think getting down just below that 40,000 mark, right around 39,000 is probably where I would expect this pullback to go to on Bitcoin. But the discussion is going to heat up more and more and more, particularly in the primaries, about what politicians' views are of crypto and digital assets, and that I think will shape the landscape going forward. So Bitcoin down 0.90 just on today's trading session. Crude oil down 0.39%, still stuck in this pennant formation. We tiptoed above it on Friday, but we're still within it. Notice that moving average now is curling to the upside, consolidating. At this point, it's just a wait and see with crude oil. Getting to our top 4, you have the S&P 500, which is down 0.37% today. That line doesn't mean anything, and I can get rid of that moving average for you guys. All in all, it still looks good for the S&P. Yes, we had this pullback here. If we break these lows that we established on January 5th, that low price for the S&P being 4,700, if we get below that, then I will make a bet that we're going all the way down to 4,550. All right, so that's 150 points on the S&P, but we got to get down there first. Right now, it looks good. It looks like we'll be challenging those all-time highs again here, so keep your eye on the S&P. moving up that ladder, you had today, it's a roll into the new session here. This probably would have been our biggest gainer on the day. That would be the 10-year bond. Jumped 3.07% today. So that should actually be number one, but because it rolled over, the numbers changed. But big jump up, but it still hasn't changed its downtrend trajectory since October. Even though it's a big up day, still in a downtrend in the intermediate time frame. However, if we get above this 4.1 mark, 4.1% yield on the 10-year, I'd expect this to keep on running. Now, I forgot who said it earlier, but I will scroll back here just so I can give you props, because why not? Because you always interact, and I love it. Margaret here today said, I heard 6, because I had talked about there being now 7 rate cuts for the year. Here's why I said that, because if you look at the clock now, this is December's expectation. This goes to December. Dang, this screen annoys me. December 18th's FOMC meeting. You can see now the increased, it has gotten a significant increase to the 3.75. So if we were to get down to 3.75, that is 7 rate cuts from current levels, because we are currently at 550. So 5.25 to 550. That means 6 to 7 is where they're expecting. It's right in between there. So yeah, 6 or 7 is where it's at right now. Lisa says S&P has a double top. Certainly feels like it's hitting into one, right? If you go bring up that ES, we hit it once. We tailed into it on Thursday and Friday of last week. You were absolutely right. Now, we don't really know if it's a double top until it sells off from there, right? It's just knowing that it's come into those levels. So it's kind of hard to make any trades from here. If I was a gun put to my head and said you have to make a trade, I would be thinking, just based off this, that it's going down. Just because it's hit that ceiling. Until it breaks above that ceiling, I'll think it's going to have a little bit of bias to the downside. So my guess, though, is it will probably come down a couple more days and then rally back up and break those all-time highs. Where was I? We did the 10-year. There's our NASDAQ, which the futures are changing the after-hour session, down 0.02%. What I find interesting about the NASDAQ is the last 3 trading sessions, you've had a whole lot about nothing, right? Look at the action. Long topping and bottoming tails on all 3 of these candles going back to last Thursday, Friday, and to Tuesday. But really, the market didn't go anywhere, right? We've got dojis 3 days in a row. Kind of a strange situation. You don't really see that much. You'll see a doji every now and again, but not 3 in a row like this that have had markets moved, but ultimately finished the day unchanged. And what was in first place, but I guess it's actually going to be second, is the dollar index, right? This is a big factor in it. I've had this target down here of right around parity, $100 on the dollar index. We got fairly close. Now all of a sudden, the past 3 trading sessions, dollar is smoking to the upside, which is certainly going to put pressure on the equity markets, but they really haven't collapsed. I'm kind of surprised to see how resilient the equity markets are in the face of the dollar moving up as much as it has been here. Dave says, why can't the Fed just leave rates alone? If rates remain unchanged, sentiment will change as well, and borrowing will increase. Yeah, I'm with you, Dave. I think if I was the chairman right now, I'd say, hey, we raised at one of the most aggressive paces in the history of financial markets. We're going to stall right now. We're going to stop and not raise for a little while. We're just going to kind of chill. Let's take a deep breath. It's okay if we keep them there for 3 months, 6 months, a year. We could keep it there and see what the impacts are. At this point, they raise enough to really at least put a dent in inflation. Does it mean that the problem is cured? No, I don't think so. But I don't think that they need to be raising, cutting. Just pause for a while. Let's just not do anything and see what that impact is. So I'm with you, Dave. The Fed should. And why can't they leave rates alone? I would argue, number one, it's expectations from the market. Number 2, it's political influence, right? As we get towards an election year, the prevailing administration is going to want to have the Fed perform certain actions so that that administration looks better. It doesn't matter what party it is. It's just kind of historical that year going into the election year will be a nice positive one and things are going to look all hunky-dory. So you look at the current president and go, wow, they're doing a great job. Look at all this data. So things can get manipulated around the mid to, right around middle of this year is where I think things are really going to start to, the numbers are going to start to look really rosy and the Fed will do things aggressive to juice the markets and give us a nice rally up in the middle of the year. Politicians, both sides, always screw things up. Yep. Well, there was one thing they don't screw up, Lori, and that's making themselves rich. You know, you look at the prime example would be like Elizabeth Warren. She had like $1 million net worth when she went into political office. Now it's in the tens of millions of dollars. It's like, wow, you got that from getting paid $150,000 a year? Okay. All right. No, you didn't. because you made all these investments and swayed the vote on those investments because you were getting contributions from lobbyists and didn't do what's right for America. That's what bugs me. And I'm not picking on Elizabeth Warren, guys. This is, you go down both sides of the aisle, and most of our political officials, political leaders are doing things which benefit themselves, not necessarily benefit you. Self-interested, absolutely. And there's not one side or the other. I'll make that clear. Okay, let me wrap up and go into what's happening for tomorrow. One thing that I did not get to, let me see if I can bring this up here real quick. I got so many things going on in my head. Let's go look at your earnings calendar. Yeah, and Oliver, we say every politician. I know there's some that do truly, honestly have a good intentions and desires. But man, when you're around that much money, it's hard to be unbiased. Let's go back. I didn't get a chance to talk about this one last week, but let me just bring this up here and go back to our earnings calendar for Friday, which we did not do a show on Friday. That's because of Les. Thank you, Les. And Les, you were even here today, Les. I didn't see you. You had BlackRock, Wells Fargo, you had Delta, Citigroup, you had United Healthcare, JP Morgan, and Bank of America all beat earnings. All of them did. Great day for financials. Now, that leads us to our Tuesday sessions. You had earnings out there today. You had Goldman Sachs. Just blowout earnings, man. They absolutely killed it, but so did Morgan Stanley, so did PNC Financial, so did Pinnacle. I mean, Interactive Brokers is the only one here that really missed on earnings, but not a bank. Interactive Brokers is more of a trading and investing. So there you are, Les. Good to see you. Happy Tuesday, my friend. Hope you had a great weekend. Great earnings. Now, here's what's cooking for tomorrow. We have more earnings, although it slows down a little bit. You've got Kinder Morgan, Alcoa, U.S. Bancorp, Charles Schwab, Citizens Financial Group, Discovery Financial Services. Those are your big names for tomorrow. I don't look at any of these as being monumental, but it will continue on our current trajectory for our markets, or at least give us more ideas to where these markets may be headed. Now, let me remove all of my filters that I put on this chart here. Tomorrow is Wednesday the 13th. Here's your economic calendar. No, that's not the 13th. It's I'm back in December. What is that doing? There we go. That's the 17th, what it should be. There you go. Retail sales. That's really the only big piece for tomorrow. You do have two members of the FOMC speaking. That's going to be member Barr and Bowman will be speaking. You have retail sales numbers, which come out 1 hour before the markets open. And that is pretty much it. I think there's a business inventory. Yeah, there's business inventory numbers 30 minutes into the trading day, as well as an NAHB housing market index numbers. Now, one thing that is interesting, particularly for those of you in the crypto space, will be this ECB President Lagarde speaking. 7:15 a.m. Pacific, so an hour and 15 into the trading session. Right now, central bankers are on the hot seat for crypto, and kind of curious to see what her remarks are about Bitcoin ETFs in the U.S. and does she say anything about it at all? And maybe what is the issue about for the ECB anyway with regards to digital assets? Because I think this is going to become a much more talked about topic as we get towards election time. So that is it, my friends. I'm officially done with my 2024 market updates or market outlooks from everybody. I hope you enjoyed that. I know it was a long-winded thing. I don't usually do that type of stuff, but I thought it was fun. I learned a lot as well, and I always enjoy talking to some of my old trader buddies and investment friends. So I hope you enjoyed that as well. I have, I think, 2 names I didn't get a chance to put on this list, but right now, the list of S&P forecast for 2024 is done. I'll make sure I finish it all tonight. I had a couple emails that came in over the week, and I didn't put those in, so I will update that list. But we have roughly 72 people in the pool. 72 people in the pool. Going to be a toasty one. Let me delete that line there, and there you go. All right, so I will put that one in a cold storage. Keep that for everybody. I hope you enjoy that, and good luck to you. I know you guys asked for a picture of the TraderMerlin shot glasses. Now that I got a new studio, maybe I can take a professional photo of them just to see if that works. But do I have my name? Pepe, I thought I saw you on there. If not, you're on the list. Pepe, what is your number? I'll just do it right now. Make it easy. I could have sworn I put yours on here. I got to go back through and check everybody's because I'm pretty sure I put yours on the other day. No, I don't see you. Are you going to talk about the halving? Yeah, sure. You know what? I can talk about that on tomorrow's show, Lisa, if you want. I'll talk about the Bitcoin halving, what it means, how it's structured. So tomorrow, maybe what I'll do is this. I'll start the show off and we'll talk about the Bitcoin halving. And I'm not going to talk about the whole crypto ecosystem. I'm just going to talk about Bitcoin halving and what it means to you and I and anybody in the crypto space. Mechanically, what does it mean? What does it mean for performance? After that, I'll do my market overview and recap all the numbers. But yeah, good call, Lisa. We'll do the Bitcoin halving impact, which is going to come here end of April. So it'll be an exciting one. So great one. I'll do that for you. All right, guys, that's going to do it for me. Yeah, I scrolled fast. I'll just... Oh, there it is, Pepe. You're right there on the screen. 57.15. You think the market's going to go up 19.84%, Pepe? I got you. You're on the list. All right, everybody, that's going to do it for me. Hope you enjoyed today. If you did, you can always give me a thumbs up. I appreciate that. You can share this with any trader or investor friends you have. Tell them to join the fray. If you have things you want me to cover, things you don't like, whatever, you can always email me at TraderMerlin@gmail.com or put your comments down below any of the YouTube videos, and I will get those incorporated into our content and make a show about what you guys want to know about. That's going to do it for me, everybody. Have a great night, and we'll see you tomorrow. Take care.